Salesforce Inc. stock took a significant hit as the company lowered its subscription revenue forecast and highlighted customer scrutiny over spending, prompting investors to reconsider the software sector's health. Following Wednesday's earnings report, Salesforce shares, CRM, dropped 15.7% in pre-market trading Thursday. If this decline persists, it would mark the stock's largest single-day percentage drop since March 16, 2020, when it fell 15.9%. Bernstein analyst Mark Merdler, who maintained an underperform rating while slightly raising his price target to 234s from 231, noted skepticism about Salesforce's future growth drivers, including core initiatives and AI monetization potential, despite market optimism. This quarter's results reveal growing weaknesses, Merdler said, as the stock plummeted 16% in after-hours trading. He added that investors need to adjust their expectations regarding the company's growth prospects, as low to mid-teens percentage growth no longer seems feasible. Although Salesforce maintained its total revenue forecast for the fiscal year, predicting 8% to 9% growth, it reduced its subscription revenue outlook, now expecting just below 10% growth instead of the previously anticipated 10%. UBS analyst Karl Kierstead warned that the report would likely dampen software sector sentiment and confirm concerns about a weakened spending environment year to date. He observed that the malaise is widespread, not unique to Salesforce, and saw no signs of a recovery in the second half of the year. Kierstead maintained a neutral rating on the stock, but lowered his price target from $310 to $250, noting potential minor risks of further cuts as Salesforce didn't extend April's weakness throughout the fiscal year. Guggenheim's John DiFucci echoed similar concerns. He saw risks in the subscription revenue guidance, which suggests a significant increase in new annual contract value, ACV growth, in the second half of fiscal 2025. He predicted more modest ACV growth, implying around 8% subscription revenue growth, which could lead to total revenue downgrades unless offset by professional services revenue, as recently demonstrated. DiFucci also held a neutral rating on the stock. However, Evercore ISI's Kirk Materne remained more optimistic. Despite acknowledging recent softness and investor skepticism about the updated outlook, he believed Salesforce's unchanged fiscal year revenue guidance indicated confidence due to pipeline visibility and favorable pricing trends in the second half. Materne argued that Salesforce is primarily a margin expansion and free cash flow growth story at this point. He maintained an outperform rating and a 300 price target for Salesforce shares.